Good morning, good afternoon, and good evening, traders from across the globe, and of course, Metastock fans. Thank you for tuning in. I was supposed to present at 6 p.m. this evening, but Mr. Steve Bigelow, he fell ill, and we all wish him a speedy recovery. Steve, speedy recovery, sir. So I thought I would take his slot for him at 1 p.m. Traders, thank you for tuning in. Again, Steve, good luck to you. Metastock, thank you so much for having us, and a fantastic day it's been so far. I am going to do a little something with you slightly different from what you may have seen all day long. I am literally just going to go over a series of charts with you. But if you are a Metastock fan and you've been to these other webinars, you will see I'm going to use the exact same charts that we used in our last webinar, which had some tips, tricks, and techniques moving forward that you can use immediately following that webinar. Well, we're several months past that webinar, and we are going to go back and revisit every one of those charts and see what is on there now. So we're going to go on a little ride together, kids. I think you're really going to appreciate what I have to show you. So let me start with this. If you don't know me, my name is Oscar Carboni. I have been started on the exchange, working with charts, Metastock since before there were electricity, before we had telephones and electricity. I've been doing this for so long. I don't think there was FM when I started with Metastock. I don't know. Anyway, I've been with them my whole life. I've used many other types of software out there, but I kid you not, and I am a master with this software and with these charts. I have been using Metastock my whole entire 42-year career. So once again, I'm going to applaud you guys. Metastock, I've tried everything else out there. I love you guys. So what's going on in the markets? I will tell you this right now. There is an 800-pound gorilla in the room if you are an analyst, a technical analyst. What is that gorilla? It is a big head and shoulders on the Russell 2000 daily bar chart. Are we topping out? I've had so many people call and go, Oscar, you're the master of head and shoulders formations, right? What's going to happen? And of course, I've been monitoring this for quite some time. So during our last webinar, we went over a series of charts. We had some tips, tricks, techniques on those charts to use moving forward. We will revisit each of those charts and see what we can derive to use this quarter for the next 3 months. And remember this, kids, no matter what is going on out there fundamentally, you can hear it, you can think you understand it, but what you need to look at is the chart, because a chart is merely a visual look at all the reports, government and or corporate, all of the news that's coming out, the news that's been out already, and all of traders' reaction to that. It's all built into a very clean, easy to read chart. And that, my friends, is how you figure out where the markets are going next. I promise you, I've been doing this my whole life. And that is what I'm about to show you. So let's go on this little ride. First thing is this. I did a video the other day. I did a video on Saturday. And in that video, I explained to many of my fans why I have not called the head and shoulders formation and called the top in the market. Let me start with this. It's a clip from a video I did just 2 days ago on Saturday, which is going to get us ready for this webinar. So let's watch this clip and lead right into the webinar from there.
Oh. Check out the Russell 2000. Now, for quite some time, people have been writing to me and saying, Oscar, don't you see the big head and shoulders in the Russell? There's one in the Dow, there's one in the S&P. And I've been kind of kidding around with them, and my reply would be, shh.
What was going to be in that video was this. I was going to show you what I recorded for my OMNI over the weekend. And what that recording was this. And check this out. I think you'll appreciate it. People are asking, Oscar, you see this big head and shoulders here. Why have you not called it for us? And almost adamant, like mad at me, writing to me. And I'm saying, listen, guys, I've seen it. I promise. But I'm not going to call it yet. There's a reason. And this was in the video over the weekend. The reason why I will not call it yet is because we had a massive head and shoulders in the Russell 2000. And what happened is it put in a flat and went up. It did not go down. Okay. Now we have a second one. And until this one calls itself and gives itself a name and actually drops lower than where it is now and allows me to project, I am not going to make a projection. I am not going to call the top in the market. That is that. If you look at the S&P, look at this. The S&P has the exact same thing going on. It had a left shoulder, a head, a right shoulder, clearly defined head and shoulders. Market went up. We're in another head, shoulder, right shoulder. Market's going up overall on the weeklies and dailies, not down. So I cannot do what you guys asked me to do, which was, Oscar, would you please give us the projection? Not a chance. Not until it projects, or at least it reaches a spot where then I can start calling downside. And here's why. When this market began this year, at the beginning of the year, we were trading down here at 3,800. And it was the beginning of the year right here. And the OMNI gave us over 5,000 projection for this year, 2023. Now, if you remember, we were trading down at 3,800. The world was coming to an end. The Fed was raising rates. Every fund manager was flipping out of the market, getting into bonds. And I come out with, you're wrong, fund managers. Please listen to me. We're going all the way over 5,000 this year. Now, look at how far we've gotten. We've already got up to 4,800 in December. I say we are correct for continuing to call the upside. And now we're going to go over a series of charts, and we're going to find out if we should be still calling upside. If you've got questions when this is done, I'll be more than happy to answer them. I'm not going to offer anything to you except for this.
Are you drowning in data, tied in trading knots, baffled by the bulls and the bears of the market? You're not alone, and it's not your fault. The world of trading can be overwhelming, but there's a path to clarity. Introducing OMNICAP. We believe in empowering traders like you with the skills and confidence to navigate the markets. Join Oscar Carboni for 4 transformative days. It's not just about techniques, it's about building a trading mindset that lasts. With 42 years of Wall Street experience, Oscar has designed OMNICAP to cut through the noise and give you the tools to trade with confidence. Don't let the markets control you. Take control of your future today. Limited seats are available. Apply now at omnibootcamp.com and let us guide you to trading success.
Using my OMNI method, I give out trading recommendations to traders all over the world. They go out 24 hours a day. They tell you where to buy, where to sell, where to place your stops, where to take profits. I will give you a free month of those recommendations so that you can see my style. The only thing that I really have planned is this. October, the middle of October, October 12th through the 16th, I'm inviting 5 people only to my home office for a 4-day seminar where I will teach them the OMNI methods, but I get lots and lots of applications. I only accept 5 out of the ones I receive. If you like what you're about to see and you want to come join me in the middle of October here in Las Vegas, you come back to me and you let me know. Let's take a look at what's going on. Big head and shoulders, I just showed you in the Russell, and everybody's worried that the top is in. Now, I have shown you this chart. This is the exact same chart that I started with in the last webinar, and that chart shows us something. What it shows us is how to read a chart correctly. How do you read a chart correctly? If you want to know if it's going down, it has a series of lower highs and lower lows, and that confirms a bear market. Simple, right? So you have a high, and it drops to this low. Then it rallies back up and hits a lower high. And it drops back down. And what does it do? It hits a lower low. Rallies back up, hits a lower high. That is absolute a bear market, right? Then it drops back down and goes to an even lower low than the one before. And then everything stops. Do you know where it stops? When AI gets released. Welcome to the AI revolution is what I told you in my last webinar. That was right here. Came out right, let's see, November, December, October, no, AI came out right here where I'm spinning in a circle. And guess what? Bottom of the stock market came in. Now, we were already starting to call for bottom in our charts, and then the fundamental reason came in, which was AI. Now, watch this. How do you confirm a bull market? Everybody's so worried that we're in the middle of a crash right now, and the market is so difficult. Now, I get fundamentally, crude is way too expensive for the market to be going up. And if you kind of look at where inflation is, you would worry that that's going to stop the market too. And all those fundamentals, the stuff the president's doing or not doing, that should all stop the market from going up, right? Well, that's human thought. The chart tells you the truth. So even though when I was saying crude's getting too expensive, it should knock the market down, it did, but temporarily. It only came from here to here. And now the market's moving higher. So let's go back. If lower highs And lower lows is a bear market. Wouldn't higher highs and higher lows confirm a bull market? So let's look. We have a low and then a high, and then a higher low, and then a higher high. Then this low comes in, believe it or not, this one was here. You can see the crosshairs. This one's higher. A higher low, bull flag, races to a higher high. We just put in a higher low. Kids, what's to say that this isn't going to go make a new high right now? Why is everyone so damn bearish? I don't really see it. I get that crude's expensive. I get it. But I'm an analyst, and the chart is not telling me to run for the hills yet. So if we are in a confirmed bull market, and there's really no reason technically for us to smash down except for a big head and shoulders in the Russell and maybe in the Dow, let's see what else we have out there. So that was your S&P chart. Next one we're going to open is Nasdaq. Now, in the last webinar, which was, I think in July, we did a webinar in July, and on this chart, I told you that the Nasdaq is in a strong bullish channel, and please use the 18-bar moving average to time your buys and sells in Nasdaq. So if you have no other method, if you don't know the OMNI and how to get in or out, you can use the 18-bar moving average to time Nasdaq. Well, I'm here to tell you, as of a couple of weeks back, it has morphed from the 18-bar moving average to the 21-bar moving average. So if you want to time NASDAQ right now, just time it off the 21-bar moving average. It's a very small average, but that's what Wall Street's using right now. And I don't care what they use as long as I can identify it and figure out how to tell you what's going to happen next. That's all that matters to me. They have flipped from what used to be a 150-bar moving average. As you can see, the blue average, and these right here, it would stop at the blue average, and here it stopped at the blue average. Well, that has changed from down here. The blue average is no longer in vogue. It went to the 18 in our last webinar, and now it is the 21. And as you can see, let me blow it up for you. Look at how well that average works on this chart. I mean, it's like a master. So use that to time your NASDAQ right now. If you don't know what to do, then that's the tip I wanted to give you for trading NASDAQ, the 21-bar simple moving average. Write that down. It is working right now. Will it change? Yes, it will. It'll morph to something different, but you've got a clean run for the last 3 months, 2.5 months using the 21-bar moving average on NASDAQ, giving you some pretty good signals. So there's the tip for NASDAQ. Let's go to another chart. We used this very same chart in our last video. Now here's your transportation average on the daily bar. And what I want you to notice about this chart is this. You see this big red line right here? This big red line? Well, that comes all the way back from the highs. That's major, major resistance, that big red line. Okay. Well, you got above the red line here in a channel. Okay, that makes sense. And why? Because what you're putting in is a low, a high, a higher low, a higher high. Probably a higher low comes in next, and we just keep working our way back up. That's what the transportation average is showing us. And here is what else is interesting. This red, what used to be resistance, that stops the market from going up. Hey, let me grab this little tool. Stops the market from going up, right? Well, once we got above it, it becomes support. So I made the line go from red to green. That's a green support line now. All right, so what did the market do? It came back to the support, and it's testing it right now. We are literally just testing support. Now check this out. I think this chart is telling us exactly where it's going to go next. You want to see something cool? Watch this. I think this chart is projecting for us right now. Here's where I think it's going. Look, I think it'll just follow that channel right to this spot where it always finds support. Kind of makes sense, and it would do that, right? Being that we're in a downward segment. Now, the 100-bar moving average has been a key, and we're at it. We tested it and got back above the support resistance. But you are in a channel, and there's a good shot that we'll end up working our way down here in the next month. And then what would that mean? That would mean nothing more than continued a low, a high, a higher low, a higher high, a higher low, and we will just continue to move upwards this year if that comes down, hits the support, and takes off. But that's the channel we're in. First thing is you got to get underneath this. You might not ever even get underneath that. If you get underneath that, we're going here. Not a big deal, kids. This is not a crash coming. We're not in bad shape. Now, I went out looking for reasons to tell you in today's webinar that the Head and Shoulders is pointing towards a big crash, but I can't find those reasons for you. What I found instead was to think it may pull back a little and move much higher. Let's go look at another chart that we looked at in our last webinar together, the Russell 2000. Now, the Russell 2000 in our last webinar, I said that you can use the 200 bar moving average on the Russell. And as long as it holds, you can get long. If it gets under, you can get short. Well, when it holds, it works really well. When it gets below, it also works really well. Gets below and then stays below and then stays below. Check this out. I mean, these charts are just, they tell you what's going to happen next if you know how to read them. Stays below. Finally, it gets above. And then what happens? It starts holding it as support instead. So what I'm here to tell you is this. Yes, we know there's a Head and Shoulders, right? But we are not going to use it at this moment in time. We are going to keep an eye on it. And instead, I would rather see what happens at the 200 bar moving average. And better than that, I want to see what happens here. Because if we just hit here and go back up, well, it's a series of lows and higher highs and higher lows and higher highs. And that's fine with me if that's all that's going to happen. Before you even get there, you're using the 200 bar moving average to time your Russell 2000 on the daily bar. And this is, by the way, it's no longer set. We're looking at December. So let me change that to Dec. And that is correct. All right, so save the chart, on to the next one. So does everyone see how well the 200 bar has been helping the fund managers figure out what to do in the Russell? Or you got to remember, kids, I am from Wall Street. I grew up there, started at 18, spent my whole life there until it went from trading in a pit to the electronic on the internet, and there was no more pit trading. So, you know, I got this stuff. Just listen to me. I promise I'll show you what's going on. So what's next? In the Russell 2000, as we mentioned, we're going to let that percolate. And after Russ, we looked at a crude chart in our last webinar. And in the last webinar, I had things to tell you. Crude below 77 will help buoy the stock market. Why? Because in our last webinar, we were below 77. And I also told you in our last webinar that the tip was staying below the 100 bar moving average is your key. And if you look at this 100 bar moving average, it was absolutely key all the way through this move. Key, gets a lot over it for just a stint, key. Then once it gets above, it stays above. All right, so crude finally gets above this big resistance, which was holding it under 77. It gets above the 100 bar moving average and starts to move higher. Now crude is in a channel working its way up, and here is the only tip I have for you. Staying above 93.50 is key. If we get above that red circle, well, let me move the red circle. If we get above this spot, the funds are going to come in and take this thing to the moon. You gotta kind of hope that crude runs into some resistance up here, stays around 93 and a half, and then starts to work its way back down. There's no way crude can continue higher without something happening to the stock market. Every product practically in that stock market relies on energy to build that product and get it out to market. 4% of this world is on EV. The rest is on gas. I promise you, crude is the big gorilla in this room, besides the Head and Shoulders in Russell, but that's for technical analysis. Fundamental analysis, crude is the big gorilla. It is really bad for us right now. But the market seems to be absorbing it, and I'm going to use the chart. I don't care what I think. I don't care what you guys think. I don't care what the President of the United States thinks. I do care what the chart tells me, because that's where the truth is. Chart says market somehow is dealing with crude. Let's hope it stays under resistance at 93.50. So it's above that 100, right? You can't use that as your trigger anymore, kids. That's why I put the strikeouts through these. That's about the only info I can give you on crude for now moving forward. Unless you're long, enjoy yourselves. If you're long, have a great time, kids. Crude's a good market. Next is, there's really nothing on this, but we'll look at it anyway. We looked at a Bitcoin chart last. Bitcoin is just not in vogue at the moment. Crypto is not in vogue at the moment. You can see in the chart there's nothing going on. But the one thing that we did have was it's been riding the 200 bar moving average, and it's still doing the same. I have zero opinion for the short term of Bitcoin. I've got a different opinion. I've got 85,000 for Bitcoin, and it should get there in 2 years, 10 months. That's what we should get there. 2 years, 10 months, we should hit 85,000. We shall see. It's been my projection for quite some time. time dated for 2 years and 10 months from now. But there's really nothing on this chart, so let's move forward. T-bonds, okay. When I showed you this last, I was telling you your tip was use the 150 ball moving average to decide your crude direction, and it worked like a charm. Look at the black average and how many opportunities it had, but it's morphed since. It broke through the must-hold green line support, started creating a new channel on the way down, telling us interest rates will continue to go higher. And here's the new thing. I'm going to lower this guy for you. Watch this. Let's make this one thinner. And let's pull this one out to light. Here's your new trigger. If you want to write this down, it's your new trigger to use average-wise on bonds. Boom. Check that out. It's a very, very small average. And let's go check the average for you so you can see it yourselves. It is a 31 bar moving average. That's what's working now. The 150 is not in vogue at the moment. This one right here is working perfectly, just perfectly. That's the one that they seem to have logged onto and seem to be liking lately for the last few weeks on Wall Street. So I noticed it and thought I would let you know about it, because if you hit it again, it's a short. And every time you hit it lately, it is a short. So keep that one in mind. You're looking at your 31 bar simple moving average, and we'll put it here for you. The new tip. So use, I think I wrote that in the wrong place, so we just move that to another spot. There we go. Use a 31 ball. All right, for you guys, use the 31 bar SMA to time bonds for now. If that changes, come to my website, livewithoscar.com, and I'll tell you what bonds are using next. So that's your trigger in bonds. It seems to be working very well. It was the 150. That's old news, right? The new news, 31 bar moving average. And we're in a red channel. Let's go see what else there is to look at out there. Last time together, we looked at the dollar. Okay, we had a dollar chart. So I'm pulling the same dollar chart. What we did on this chart last was we talked about the 70 bar moving average was the ticket. And it was, and it worked really, really well here, 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 here. It worked well all the way through the dollar move. And in a bull market, how do you know? Remember, a high, a low, a higher high, a higher low, a higher high, a higher low. When you see that, you're in a bull market, right? Well, we switched to a bear market. The 70 bar moving average becomes in vogue. It's out of vogue, if you will, right now. So we'll make that one lighter. Goodbye. There's a new one in vogue at the moment, and I think you'll appreciate this new one. Check this out. The new average is a 19 bar simple moving average. Why? I don't know, but that's what the street logged on to. How about that, huh? Now, just more proof how well analysis works. This bear flag was put on the chart when we did our last webinar. Look at how well it produced. Inside this was something I put on the chart for the last webinar. Look at how well that produced, huh? Analysis really works well. In the right hands, a chart is about the best tool on the planet. And I can teach any of you how to read a chart. I promise that is the easiest thing to do. You just got to get your mind out of it and use your eyes. So simple SMA 19 bar moving average is your trigger on the dollar index lately, which kind of makes you think it's probably the trigger in euro, right? So dollar index was in the bull market, bull channel, goes into a bear channel. How do you know? A high, a low, lower high. Didn't quite get to the lower low yet, but just, oh yeah, it did. Lower low, lower high, lower low. We knew that's bear. Now you broke out of the bear channel and you are in a bullish channel. Things are changing. Now, bull channel. So now we're back in a bull channel. We've switched averages. And if you want to write something down, that's what you would write down if you wanted to time US dollars. 19 bar moving average, and use that channel to let you know when you should be getting out of longs or back into longs. So that's what I've noticed. And it says here, the dollar dropped below the 70 bar moving average. Channels were pointing lower. That was what we spoke about last time. Here's the new tip as of 9/23 this month. Use the 19-bar MA to time your dollars. Channels are now pointing higher, opposite of what we had last time we looked. So things are changing. Dollar is moving along. Open. Now, if the dollar is moving up, what do you think the euro currency is doing? Same thing on the downside, right? In a serious channel. And of course, one would expect that because that's what's going to happen if the dollar's been spending a lot of time going up. Other currencies that are priced in dollars will be going down. The average that has been in play was the 70-bar moving average. It has morphed. It is now the 100-bar moving average, and even that's kind of far from the action at the moment. So all you really have in the euro is this channel, and I would play that channel because look at how well it's been working with the exception of one little breakthrough to go touch the 200-bar moving average, and that was it. It went right back down. I mean, the 100-bar moving average. And as soon as it touched it, it went right back into the channel and respects this channel. And kids, I just showed you one on the other chart. See this bull flag? And it worked. The market went up. Well, you've got a bear flag sitting right here in the euro. Right? Can you see it? So let me make that a little thicker for you. Boom. And obviously, you'll recognize this in just a snap as soon as I put one on and create a parallel of it. Boom. So you have a flag right there. And what did the market do? Went right down based on that bear flag. So this analysis works really well if you know how to use it. Bear flag at the top of a channel, perfect spot to sell, right? And down it goes. So this would be an example of a bull flag. If you don't know what that is, this is a bull flag. That would be this one right here. Let me just move that flagpole where it belongs. And, well, actually, what needs to happen is that needs to be pulled up a little bit. So there's your bull flag, and it worked. And here is your bear flag, which is exact opposite, and that worked as well. So you've got a bear flag, which would be this formation, inside of a downward channel below the 100-bar moving average. All right, so we're still bearish euro, that's for sure. The only tip I have for you is to ride that channel because there's really no averages that are around it right now. What do we have? What did we look at last? So there's another Bitcoin chart, being that it was in our routine last time. We'll put it on our routine this time. And what did this chart say? It said Bitcoin basically trades in these channels, and the 50-bar moving average has been our trigger. So Wall Street's algos watch the 50-bar moving average in Bitcoin as aptly in stocks as they do in Bitcoin. They watch the 50-bar moving average in just about every market. And as you can see, that's worked perfectly, right? So Bitcoin's in this channel right now. Again, it's not in vogue at the moment, so not a whole lot going on. The volume isn't there. The street's not there. So you're not getting a lot of movement. I say once you get above that 50-bar moving average, the street will get very happy, like here, and start buying again. So really nothing, as I said earlier, really nothing much in Bitcoin. It was in a bear market for quite some time, right? Long, long time in a bear market. Down, 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 down. Then it went into a pennant and broke out of the pennant right here. Right, you have your breakout right here, pennant breakout. And since then, well, the pennant breakout, of course, is at the pennant. And since then, you've had a bull market, mostly, with some downward movement. So right now, it's just not in vogue. I mean, kind of wait for Bitcoin. It will be good. It's just not good at the moment. So what else was out there? Nvidia, traders, it's still working. Last time we looked at this chart, I told you it's part of the AI revolution. Welcome to the AI revolution. Why? Because Nvidia was doing nothing until about here. And that's when AI came out, right about here. Boom, AI comes out, and this is what happens next. And it immediately goes into a 21-bar simple moving average and starts to work like magic. And it is still working. Now, we just got under the average, and what's going to happen is this. Check this out. Get ready for this to happen and let's make it solid, in Nvidia. You see this chart, this trend line that we've been riding? Well, basically it shows you where the market is going to find support. Now, it's been making higher highs, higher lows, higher highs, higher lows all the way through. And if it gets here, it's simply just another series of higher highs and higher lows, because overall, Nvidia looks pretty darn good, right? So the tip on here, 21 bar moving average is your trigger if you want to go short. And this channel down here, which comes in at about 421.80, 422, is your support test. So in the 420s or up here at the average in the 465 area. Those are your two spots that you have to watch out for in Nvidia. That's where your analysis is running into extremes on both sides. So keep those levels in mind and certainly use that 21 bar average when you get to it. It's been working like magic. Let's see what else we have out there. All right, so now let's talk about this bear market that people are talking about on television, and so many nuts are writing on my YouTube videos, getting angry with me for not calling a bear market. And I have to ask you, traders, if I said to you, there's nothing, I'm not going to give you an opinion at all. I want you to tell me, is this a bull market or a bear market? I have to think that any of you with a pair of eyes that work, or if your eyes aren't that good with your glasses on, that you'd call that bullish, wouldn't you? Wouldn't you call that a bull market? Well, that's the market we are in. That's our Dow. So when you hear these people on TV and you hear this stuff on the internet and your friends telling you that this is the middle of a crash, point to this chart and say, do you know what? This is all-time highs. The Dow's never been higher than this in its whole life. Right here, look. The Dow has never been higher than this in its whole damn life. And we are right here. How could that be a bear market? You know what I'm saying? How could we be bearish yet? It may turn to a bear market. It might turn to one, but it is not one now. And I hope that's what you're getting from this webinar. Now, tomorrow we could have a drop that takes us down so far that it flips all the analysis. But that would be something that might happen. We trade what we see, not what we hope for, not what we think will happen. So let's look at this chart. Dow Jones, if it breaks above the pennant, you can get long. I told you that on this day. It was our last webinar. It did get above the pennant, and getting long was a good move. That was the old news. Now, new news. The 60-bar moving average has become unbelievably useful. The 60-bar simple moving average, look at all the spots where you can find a great trade off the 60-bar moving average. So Wall Street loves it. That means I love it. As long as they like it, I don't care why. I never, ever ask how to reinvent the wheel. I just want to buy a good wheel, a fast wheel, put it on my car, and drive down the block as quickly as I can with it. Well, the same thing with analysis. There's no reason to ask why. Just do what you see. The 60-bar moving average is working really well. We are at it right now. See, we are at it right now as I speak to you. In fact, the market is up at the moment. So if you want to see Monday's bar, we're heading up away from this average right now. So don't listen to the noise on the street. Use your eyes and listen to what use your eyes to tell you what's going on and listen to the chart. Listen to the chart. I promise it works better than anyone's opinion. So this chart is showing us that there's massive support and the 60-bar moving average right there. Unless you get under that, this is nothing more than a low, a high, a higher low, a higher high, a higher low. Next thing should be a higher high. Do you see we're not in a bear market? I could not find reasons to come out and tell you we're bearish. So I can't. I've got to tell you we're not. Some questioning, yeah, all right, the head and shoulders is a little bit scary. But for now, as day traders, we are going to stay bullish-minded and trade the OMNI, whatever arrow it gives us day by day. Let's see what else we have. We just did knock, right? Oh, we did the Dow Jones. Okay. Once again, I'm going to see these charts have a lot on them because we've been using them for 3 webinars in a row, by the way. This is our 3rd webinar using the exact same charts. Way back when this started, when I was using the webinars, I pointed to the top being in and said, we got a massive head and shoulders, and down we go. And that was one that validated itself. All right. So that happened and down we went and blah, 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 and all that crap happened. And then I put this note in for you, an inverted head and shoulders, this one. We're above the 200 bar moving average. it looks good. You should be able to buy this, right? And it has gone up ever since our last webinar. And I granted you've got the head and shoulders right there, right? But remember, we are going to remove these right now. And we're going to pretend, even though we know it exists, it hasn't given itself a name yet. And until it gives itself a name, I am not calling it the breakdown head and shoulders. When it tells me it's one, I promise the day it says it, I'll do videos, I'll put it out, you guys will know, and we'll look at it as what it is. But for now, I've been watching this go up more than down. That's not the biggest head and shoulders in the world. If you ask me, you need one to take over the whole front of my screen to be a topping head and shoulders, I would think. So this one took from, let's see if we can find some dates, 10, 12, 21 to 6, 2, 22. 10, 11, 12, 1, 2, 3. You got 6 months there. This one is from 6/15 to 9/15. You only have 3 months. It's half the size. It's very small. And what I've learned over the years is a smaller head and shoulders formation is a continuation pattern, not a topping pattern. So I'm going to call that continuation pattern for now, unless something changes. Now, once again, this has been nothing more than a series of higher highs and higher lows, right? From down here, a high, a low, a high, a lower, a higher low than the one back here. It starts messing around, makes a higher high, a higher low. I mean, that's all it's done. The whole up move has made higher highs and higher lows. So we are not calling the top, not yet. We'll let this thing call itself. And in fact, I mentioned 1-2 days from now, we could be screaming the top's in, but not yet, because that's not what I'm seeing. What's next? I think we just did DJI, right? Let's go look at this one. So the Nasdaq on a weekly. You know what? Let's get back to this puppy. Let's go look at other ones first. We'll come back to the Nasdaq. Nasdaq on the weekly. Let's go to this guy instead. In fact, even better, there should be 3 weeklies. I want to go see all 3 of them. We looked at all 3. Let's go see all 3 of them. All right. Now we're gonna come out to the weeklies, kids. Now, here's where all of this is going to start to make sense. Remember, you've heard all the chatter. Crude's too high. That comes from me. You've heard the chatter on TV. Inflation's too high. And everybody else, and the bear market's coming. Get all that noise, right? Lots of noise. But the charts have no noise in it at all. Now, this chart does not tell me we're in a bear market, not even this much. It looks like a bull flag to me is what I told you on 7/23, our last webinar together. And 7/23, by the way, is right there at the end. Boom. It gets above the flag, somewhere right around here. Gets above the flag, and better than that now, it's in this fantastic channel. Look. Fantastic channel. And the all-time forever highs in this chart is here. The all-time forever high that we've ever traded in the Dow is here at this blue line and that circle. All right, we'll make the blue line red so that you can really see it. That's the highest we've ever been. Well, we're right here, kids. We're right here. Where the hell is that a bear market? On what planet would you call that a bear market? Not on planet Oscar or not on planet OMNI, that's for sure. So the tip in this was you could buy to break out above the flag. That happened. The new tip, you can buy dips down to the 50-bar moving average. Well, really, it's down to the bottom of the channel now. Look how far back this channel line goes. Kids, it's a weekly chart. This channel goes all the way from 10/14/22. 10/14/22 all the way to 9/23. It's a big, long line. It's a weekly chart, don't forget. That shows support. We are very near the highs. We are not in a crashing bear market yet. Please note this. Please realize that what you're hearing on the street is not what the charts are telling us. So that's your Dow on the weekly, and it does not look scary at all. Let's go to the next weekly chart. Transportation average weekly chart. Now look at this. In the last webinar, I told you this is doing nothing more than stepping higher. Steps up, steps down. Stair steps up, stair steps down. Stair steps up. Now, in this stair step going up, this is the one everyone's calling the bear market in right now, right? Well, I look at it like this. you have a low, and you put in a high. And we put in a higher low, and we put in a higher high. And if we come down and hit this line, all we're going to do is put in a higher low than the one from back here, right? And that would be nothing more than a market working its way higher. It is just simply stair-stepping higher. Am I getting my point across? Do you see that we're not in a crashing market yet? All the fundamentals are ugly. I get it, but we're not in a market that's crashing right now. It is pulling back a little bit, making room for the high price of crude and for a bunch of people jumping out of the stock market and locking in some money in bonds. But I don't think they're going to raise rates anymore, at least not this year. If they don't raise rates anymore, there's really no reason to plow out of stocks and into bonds anymore. If you didn't do it already, why bother? So that's going to plateau, that whole movement out of stocks into bonds. Let me DND that for you, please, so people don't bother me. I forgot to do that earlier. Can you DND those phones over there, please? Okay, so if you don't mind, just go in there and DND the other phones in the office. Hit the DND buttons. Thank you. All right, so if it came down here and put in a series of another higher low, well, so what? That's what it's supposed to do. And the whole thing's above the 200 ball moving average. We are not in a crashing market at this point in time. Now I'm going to go to another chart. The Nasdaq. Now this one, kids, this is our indicator. Anyone who's been following my webinars for since the beginning of this year, since the beginning of the year, I have been calling for massive upside to come our way. One of the things I've told you about is the Nasdaq is the one pointing our way. What does that mean? Let's take a look at something. This is your weekly bar, Nasdaq, and I say the Nasdaq is our indicator. First of all, right now, top day, it's in a wonderful bull channel, moving higher, looking fantastic, bouncing off the support. There is nothing on that chart that tells me the market's about to crash. Nothing, nothing, nothing. Okay, it also got above the 200 ball moving average. In one of the webinars I did, I came out and said, this is big. Oh my God, we're above the 200. This is great. The 200 ball moving average is this teal one, right? Now we're going to go look at the 200 ball moving average. Follow this green average with me as I go back in history. By the way, you're looking at the COVID crash right here. What did it hold? The 200 ball moving average. Keep that in mind. Watch this. We're going to go back in history. We get near it. But what happens when we get near it? Big rally ensues. What happens when we hit it? Big rally ensues. Okay, keep that in mind. What happened when we hit it here? A big rally ensued. Okay, let's go back now. Let's go all the way back. Do you know when you finally broke the 200 ball moving average? You didn't break it in 2004. You didn't break it in 2005, 6. You didn't break it in 2007. We broke it temporarily for the crash of 2008, 9. Boom, boom. That was it. That was it. Watch this. From 2009, it gets above the 200 ball moving average on your NASDAQ weekly and never, ever gets below it again. But watch. Watch the average. What happened? We got above the average and a big rally ensues, right? Beautiful. Continues. Massive rally ensues. You get near the average. Big rally ensues. Comes back down again, gets near the average. Big rally ensues. Then COVID forces us to hit the average, right? Boom, during COVID, we actually hit the average. And what happens? A big rally ensues. They start raising interest rates right here, and we go down. What happens? We hit the 200 ball moving average. We get above it. A big rally ensues. That's what we're getting, not a crash. That is our indicator. That's how this works. We called for 5,400 this year in the S&P. OMNI did. When the S&P was 3,800, we're now pressing the 4,800 area, 46, 48. We have a whole quarter to go up a few hundred more points. That's where we're probably going to go based on everything you just seen. So if we go back and we take a look at these crazy head and shoulders here, I believe that was on chart 18. I cannot make the call, kids. I'm sorry. I cannot make the call for the downside with all that evidence I just showed you. So that is what I have been looking at. I don't know what you guys have been looking at, but I wanted to make sure that everybody was aware of that. We are not in a crash right now. It is not what's happening. It could change. But I've just shown you unequivocal proof that that's not what's happening. So cover your ears and just use your eyes when you look at the charts, and don't listen to the crazies out there that don't know how to read a chart. Jeff, any questions?
Tons of them. Tons of them. So we had a question earlier, and these tend to tie hand in hand. So I'm going to ask them both at the same time.
Okay.
Somebody asked, and I didn't write down the name, why do you use EMAs instead of, or SMAs instead of EMAs? And Greg wanted to know how you zero in on the best SMA.
So I find that Wall Street seems to be, a larger crowd of Wall Street seems to use the SMA. And how do I know that? Because it seems to work better than the EMA. It seems to stop at the right spots. Now, there is no way that myself, everybody watching this, and all the Omniacs I know on the planet could stop a market with us getting in or out, right? But Wall Street's big enough. Wall Street's big enough to say, okay, boys, plow in at the 200 bar moving average, and it works. So you have to find what they use, and I found that the MA seems to be better than the EMA, which means this, simply more of the minions on Wall Street, wherever you want to call Wall Street today. It's not quite at Wall Street anymore. It's all over the planet, all over the country. But the concentration of Wall Street seems to be using SMA over EMA. I used to use EMA back in the day when I was more of a scientist. Now that I'm more of a purist, SMA works better. How do you find the proper average? For me, I find trial and error. Usually there's averages already snapped on my charts, and then time starts to pass, and those averages suddenly start to not work anymore. And that's when I realized Wall Street's moved on to a new average, and I start trying to find what Wall Street's using next. So the averages do morph, and every single tip that I've given you today, if it involves an average, that's temporary. It's now. It might last for 3 weeks, 3 months, 3 years, 3 days. They tend to morph when markets move into when markets change direction dramatically, you'll find that new averages are going to be used by Wall Street. In fact, when you have a really quick up run, they go to the really small averages, 21, 31. And when the market starts dropping down, they go to larger averages. Why? It's the way the world works. I don't know why. I don't care why, as long as the tire works for me. Anything else I can help you with?
Bill was hoping you could look at Tesla real quick.
Sure. Tesla. No,
I think that's the wrong.
That's not Tesla.
Let's try again.
If that was Tesla, Elon be broke by now.
As soon as that's anyway.
Is it .o
There
maybe?
you go. Yeah, you got it.
Let's drop some kind of template on here so we can see what's going on. All right, so lovely, lovely, lovely Tesla. Let's label this so that we know what we're looking at. So we've got Tesla, and this is a daily bar, right? Yes. All right. So Tesla daily. So just looking at, without having anything on this chart at all, I recognize something that you guys who have been hanging around me long enough would recognize, called the F flag, right? Simple, 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 but let me show you what that is. So we've got an F flag, if you will, sitting right here. And the F flag is this interesting phenomenon because it's the opposite of what you would expect. So I don't know that I want to get into a huge lesson on flags here, but a traditional flag, and let's just make this a little darker for you, and you'll see why I'm getting at this. So a traditional flag is something that has a flag pole like this. And then if it's a bull flag, the flag goes this way. All right, so that's what you would normally call a bull flag. But what is that? It's completely bastardized, right? That's not a bull flag. Well, I kid you not, many years ago, 10 years ago, I stumbled onto this new formation, and I qualified it for 5 straight years before I brought it to my Omniacs. Then I knew what it was. That, my friends, is called the F flag. It is bullish, and you can ride the F flag as long as you stay inside of the channels of that F flag. You can ride it as long as you want. But at the end of that flag's life, it likely will go down, not up. It's opposite for some reason. The breakdown will be opposite of what you would expect. But you can stay in that flag for weeks on end. So that's the first thing I've noticed, is that it's in a nice bull flag for now. Now let's get rid of that. And of course, if you want to do simple trend lines, you can just go, well, are we moving up or down with Tesla right now? And clearly we're moving up with Tesla right now, right? Simple. And there's a better channel than that building right here. So let's go create that channel for you. And you'll see what you should be doing in Tesla right now. And that's a parallel channel. I'm assuming it looks pretty parallel to me. And there is what you need to do in Tesla for the moment. Stay inside of the confines of this channel, and it seems to be working quite well. And that channel is pointing up, which means you can be a buyer of dips. So fundamentals, you know, you go out and look at all the fundamentals you want, and China just banned Teslas from their government employees, and all that stuff should make it bearish, right? It's going up. That's why you're not supposed to use your head. You're supposed to use the charts and your eyes, not what you think, because we're humans, and what we think, it's almost never right when it comes to trading. So you've got that happening. Now you've also got some downside projection or downside resistance that you will see get tested. Boom. This should be getting tested very shortly. And once this gets tested, you get above that. Wall Street's not blind. They're not going to draw trend lines. They, believe me, they use trend lines. They will see us get above what I'll term red, because for now it's resistance. And we'll extend it out there. We get above that, they'll come in like gangbusters. As you can see, that's been holding us down lately. But overall, you're in a very nice, solid trend. You're certainly above whatever average was sitting on here. I got to assume it's the 50. And that is the 50. Let's go look at something a little thinner than that. 50. Let's see if, I don't know. The last one we looked at was a 31, right? They were using a 31 on Nvidia, right? I wouldn't say the 31 on this chart, so we'll get rid of that. So they're not using that. I would use that channel in Tesla. I like Tesla to buy dips. Nothing wrong with the look of that chart to me.
All right, I think we have time for one more, maybe. Steve wants to know, yields have been inverted for a while. Do you have a prediction for rates mid next year?
So I think rates, the Fed's not going to just continue raising rates like crazy anymore, because basically supply chains are back to normal, and inflation would be lower if it wasn't for crude. So let's say the Fed doesn't do too many more raises. I would think that we're going to stay basically where we're at. And if the Fed stays quiet, the market explodes. Now, the chart is what's supposed to tell us what's going on, right? So let's go look at that instead. According to this chart, we are going to have higher rates. The bonds should make their way down to 109. That's going to probably equate to a 10% rate. So it's going higher unless that chart turns around. I only have the chart to use, right? I don't run the Fed, so I couldn't possibly give you an exact answer. That chart tells me we're going to 110, 109 in bonds. That puts us at about 10% rate.
All right. Let's see. Here's another one. I guess we did have a question, time for another. And Bam Bam wants to know, in your opinion, what market has the biggest potential for movement for the rest of the year?
Nasdaq.
Okay.
Nasdaq's got the biggest potential to make the most move. And I think you will find S&P is going to make a very surprising move before the end of the year as well. You get a single word that the price of crude is somehow going to be relieved, and the stock market will you'll see rallies that you've never seen before, because it's dying to go up. You got crude at $91. You got interest rates rallying higher. You got all sorts of reasons fundamentally to think lower, and this market is solid as a rock. Just imagine if they can get the price of crude to come down just a little bit, what would happen? You got a lot more bullishness here than bearishness.
All right. Should I go and sign up at livewithoscar.com?
Yes, if you would like. Let me just show you a couple of things very quickly. I've got livewithoscar.com, where you can find me any day, literally 24 hours a day. I am here. Let me just pull it for you. Should be sitting in one of my windows. So one of the things I don't do, and you could ask Jeff, is I don't do a lot of advertising when I do these webinars. So he helps me out. Thank you, Jeff. So
you bet. Here to help.
Come to livewithoscar.com. Literally come here. If you're not a member, in just a moment, you'll hit register. No credit cards are required, nothing like that. You use a username, password, then you're going to get an email. That email is likely going to go to spam. Click that email, and you can pop right into livewithoscar.com. And in one click, you can be in a live trading room with me. That live trading room is something like this, where I am always on camera live. I am right now the other camera you're using. Otherwise, there'd be two cameras in this room. You can see me at all times, and there's no charge for this. As I mentioned, I am going to give all of you watching today a 1-month free trial of my trading recommendations. I put out recommendations 24 hours a day. These trades go out to people all over the planet. When they see the recommendation, they react to it. And I get them in and out of the markets. It tells you where to buy, where to sell, where to place your stops, the whole 9 yards. And you guys are on me. When I give you that trade, I'm running the trade. You guys are fine. So I send those out 24 hours a day. You can easily get them by grabbing the Daily Omni. But what I want you to do is come into my chat room. So you'll just click that. Come into my chat room, and boom. So what happens is it opens up another window. It looks just like that. You click one more, and you are in the live chat room. So there, it's my hangout. I spent most of my life in a trading pit standing around with a bunch of people. And instead of doing that now, I don't have a trading pit. I've got a trading room where you guys hang out. So that's where we are. The next thing I'll tell you is you can go to OMNI Bootcamp. And if you want to come meet me and hang out in Vegas for 5 nights, 4 days in my home office and learn a 4-day trading course, you go to OMNI Bootcamp. Just simply fill out a questionnaire. You click here, start your application, and I will contact you. I am only letting the maximum 5 people in. It is here in my home office. Listen, I'll tell you one thing. There's a lot of software out there you can buy. One of the things I've noticed in my life is if you can buy the software on the shelf, if it's packaged up and ready-made and 1,000 people can buy it, why would you want it? I would never dream of selling my Omni. I've got an Omni much more intricate than the analysis you've just seen here. I would never box it up. If you don't come to Vegas and spend 5 days with me in my home office, you'll never learn the Omni. So for whatever's out there, maybe it works for you, maybe it doesn't. I would never dream of selling my Omni to anybody. Because when you have something that works, you keep it close. You don't sell it to people. Anyway, if you want to come hang out with me and let me teach 5 people, you'll go to OMNI Bootcamp and fill out your applications. Then I will call you and qualify you and see if I want you to come to my home office where my wife and children live. So it's as real as it gets, kids. If you want to come out and hang out with me, I promise I will show you how to time these markets. What you're seeing here is my technical analysis 101 kindergarten analysis. I promise you, I could do this drinking milk and cookies laying on a cot in kindergarten. That's what I'm showing because it's effective and you see what's happening with the charts. What I would show you at OmniCamp is exactly how to pinpoint where to get in and out of these markets, that the markets can't go anywhere without you knowing where they're going to go next. But that's only going to be a handful of you and not many get approved. Anybody who wants the free trial, you can have that. Jeff, did I advertise this time finally?
You did great, yeah. Also you did a couple. We have questions that we just won't get to, and I apologize for that just due to time. There's a couple comments I wanted to say. Native Gamer said, "Oscar's the man!" Exclamation point.
Well, thank you.
And in addition to that, Pauline called you a goat.
Ooh, well,
Oscar is the greatest of all time.
I can tell you this, the charts are the greatest thing in the world, and I can read them really well. Whatever that means, I don't know, but thank you.
All right. Very cool. I want to say thank you again, Oscar, for coming in, spending about an hour with us. We love having you.
As always, love doing these. If anybody needs anything, please come see me. I don't charge for any of this. Just come hang out with me, okay? I'll set you guys straight. Thank you. I will see you all at livewithoscar.com. One last thing I'll do for my Omniacs. You want to say this with me, guys? I know some of you will do it. Are you ready? 1, 2, 3. Stop or in. Emotions are rock and roll, kids. That is the truth. Put your stops in. Keep your emotions out. I'll see you all at livewithoscar.com.